look for in a company before investing?
The preamble of my investing is basically buying high quality businesses, which I define as businesses that generate high return on capital employed, substantially higher than the cost of capital. And because of this, they have this ability to generate strong cash flows. I think the most sustainable wealth gets created when you invest into businesses that inherently generate strong economic value. So my investment philosophy is built around buying businesses that generate economic value and staying the course with them for a long time, rather than buying them cheap or selling them high or looking at turnaround cases and so on.
What is your market outlook for FY21?
So I think FY21 could be the year of repair. We've seen the economy hit a cyclical low point in the current financial year. The government is making efforts to get growth back, first at a higher than 5% mark, and then gradually take it to its more normative level of 6.5% to 7%. We should see evidence of this play out over the next 4 to 6 quarters, and I think markets being a vehicle which discount the future, I think markets would start to discount this improvement or uptake in economic activity into the prices.
What are the sectors one should avoid?
As per my philosophy, there are a few sectors that I clearly avoid, and these are not at a particular point in time, but I feel these are sectors which don't satisfy rule number 1 that I discussed with you, which is that they don't generate sufficient ROCs and therefore would not have the ability to generate strong economic value. These are sectors like commodities, including metals, sectors like energy, which includes oil and gas as well as public utilities. These would be sectors like aviation, real estate, infrastructure, and so on. Through the cycle, the inability of such businesses to not generate sufficient cash flows, return on capital higher than cost of capital, and therefore inability to create economic value are the reasons why I am negative.
What are the sectors that one should watch out for and why?
Just like there are sectors which I clearly avoid, there are sectors which I clearly am bullish on from a longer term perspective, and I try to keep them in the portfolio, again not because they would do well in calendar 2020 or 2021, because I feel that the evidence of economic value creation from companies within these sectors is possibly the highest. So these are sectors like private sector banks, including a couple of very high quality NBFCs, IT services businesses, including some internet related businesses, the entire healthcare space, which includes some pharma names as well as some companies on the diagnostics side, auto, which of course is a highly beaten down sector today and a sector which is not favored by many, but I think it has the ability to create long-term value, and of course the valuations are fairly attractive at this point in time as well. And finally, consumer goods, the one sector where I feel the most sustainable wealth would get created over the next 5 to 10 years, just like it has been over the last 5 to 10 years, because of the simple reason penetration level across categories is very low right now. As per capita income increases, we would see higher penetration across different categories. And B, because essentially companies in this sector are having the power of a very strong brand and therefore have the power of pricing their products and passing on the cost inflation, they basically have this ability to generate strong cash flows and therefore strong economic value.
Could you share your key investment learnings?
You see, what usually catches my imagination is the ability of a business to continue growing, which I call as a very strong growth runway. But of course, what precedes this growth is the quality of that franchise. I think where I got tripped in this business was that I kind of overestimated the quality of the franchise. I overestimated the ability of the business to sustain strong cash flows, and I didn't dig deep enough to figure out why are the cash flows actually not so strong as they should be, because after all, education is a business where as parents we give the tuition fees in advance rather than basically at the end of the year. So the sector actually should have very, very strong cash flows, which wasn't the case, and I think I overestimated the ability of this company to start showing strong cash flows. So the big learning was have the evidence of cash flows right at the point in time when you are investing, rather than hoping that they will actually happen along the way.
What are your key success factors?
I would say ultimately in this business, the key success factors are basically remaining highly focused, having a very clear investment philosophy in place, and when you have that investment philosophy, sticking to it through good times and bad times. I think all of us get short-sighted when we are not performing well, when we have a lot of peer pressure, and I think that's the point in time we try to make certain tweaks into our investment philosophy, something which would have served us well for 5 years, 10 years or even more. Just because of short-term performance-related pressures, we try to make some tweaks in that philosophy. I think that's the biggest error. And if one can remain highly focused and dedicated to whatever philosophy you've written down for yourself, that to my mind is the surest recipe for success. So I clearly try to remain focused around my key tenets of buying high-quality businesses that can show sustainable long-term growth, and buying them at a reasonable valuation.
Who are the fund managers that you admire?
I would say my biggest inspiration has been Warren Buffett. I joined this industry about 20 years back, and I think right from that day I've been reading about Warren Buffett and how he created his portfolios right through the 1960s to the present day. And in addition to that, while I was thoroughly influenced by Warren Buffett, I also realized that Warren Buffett in turn used to, in the later part of his career, used to have a style similar to someone called Philip Fisher, who was about 20-30 years older than him and was practicing the same things in the 1950s and 60s.
What is your return driven by?
So my return is driven by focus on high quality businesses that I hold in the portfolio.
Which are the sectors that you're currently bullish on?
The key sectors where I think economic value will be created, namely private sector banks, IT services, healthcare, consumer goods and auto.